Before we start, a quick update. My recent ideas continue to work reasonably well. Within a month since my YouTube videos published, NECT is up about 29%, Okta is up about 31%, Fivin is up about 5%, while Zem is down about 4%. Not every trade works, but I want to show both winners and losers. Now let's look at today's opportunity. What if I told you the market's biggest AI winners are not where everyone is looking? We're talking about companies like Palantir, PLTR, Oracle, ORCL, and Affirm, all positioned for massive upside right now. The market is standing on the precipice of a critical macroeconomic event, with next week's non-farm payrolls data set to trigger a potential 10% swing in growth stocks. But while many are playing defense, our research points to specific opportunities in AI infrastructure and high-conviction financial pivots. Today, we're cutting through the noise to show you exactly where to find alpha, uncover the hidden technical patterns, and dissect the financial health of the names set to thrive. This isn't just about surviving volatility, it's about capitalizing on it. Let's dive in. We're entering June with a cautiously bullish stance, largely thanks to the recent PCE inflation print, showing disinflation remains on track. This has provided some breathing room for equity multiples. However, a critical three-signal audit highlights continued caution. While equity volatility, measured by the VIX, is constructive at 16.2, bond market volatility, indicated by the MOVE index at 73.5, suggests bond investors are skeptical of a smooth Fed pivot. The 10-year Treasury yield, currently at 4.42%, is our line in the sand. A breakout above 4.47% could trigger significant de-risking in interest-sensitive sectors. All eyes are now on next Friday's non-farm payrolls report. A hotter-than-expected print above 220,000 jobs could spike yields and trigger a sharp correction, while a cooling market below 180,000 jobs could ignite a massive growth rally. This binary event makes strategic positioning paramount. First up, let's talk about Affirm, ticker Affirm, which we're calling the digital credit disruptor. Affirm is rapidly evolving beyond just a buy now, pay later checkout option into a core infrastructure layer for digital commerce. Its pivot to a multi-lender strategy reduces balance sheet risk while expanding its reach. The company generates revenue through merchant network fees and interest income, driven by a surge in active consumers. With 38% year-over-year revenue growth and a pathway to GAAP profitability in fiscal 2027, Affirm's unit economics are structurally improving. Its balance sheet is robust, boasting $2.10 billion in cash and managed leverage. The Google Pay and Amazon integrations provide an enormous distribution moat, coupled with over a decade of proprietary SKU-level data for superior credit underwriting. We see Affirm achieving escape velocity, with a target of $95, propelled by the transformational Google integration, which is not yet fully priced in. Next, we have Oracle, ticker ORCL, which we label the AI cloud colossus. Oracle is no longer a legacy software play. It's a high-growth cloud infrastructure powerhouse. Their unique, dedicated AI clusters have become the preferred choice for government and hyperscale AI workloads, driving an astounding 84% year-over-year growth in OCI, their cloud infrastructure business. The company boasts an industry-leading 44% non-GAAP operating margin and a massive $553 RPO backlog, providing unprecedented financial visibility. Despite elevated debt from the Cerner acquisition, net debt to EBITDA is rapidly declining. Oracle's competitive advantages are formidable: virtually impossible database lock-in for Fortune 500 companies, and a superior bare metal OCI architecture for lower latency AI training. With a price target of $275, Oracle is our primary mega-cap vehicle for the second half of the AI infrastructure cycle. Our third core stock is Palantir Technologies, ticker PLTR, or the Enterprise AI Brain. Palantir is the definitive software layer winner of the AI era, transforming enterprise data into AI-ready insights through its proprietary ontology platform. The company's growth is hyper-accelerating, with 85% year-over-year revenue growth in Q1 2026, primarily driven by its U.S. commercial segment and the success of its AI platform, AIPT. Palantir operates with an exceptional Rule of 40 performance at 115% and a rapidly expanding 28% GAAP operating margin. Its balance sheet is pristine, with $5.80 billion in cash and zero debt. The company's competitive moat lies in its unique ontology layer, which makes enterprise data AI ready in days and deep ecosystem lock-in. With a price target of $195, Palantir is best positioned to capture the next $1 trillion in enterprise productivity gains, entering a multi-year markup phase. Shifting to the charts, Affirm has decisively cleared its $70 resistance shelf, now showing a bullish breakout trend. Its SI is at 68.4, approaching overbought, but momentum remains high quality, making pullbacks into the $68-$72 range attractive. Oracle has completed a massive technical re-rating, surging past $210 resistance into price discovery mode. Its RSI is 75, also bullish, with the 50-day SMA turning sharply positive. Any backtests to the $210 support should be seen as a buying opportunity. Palantir PLTR is strongly bullish, having cleared the critical $150 level on massive volume. Its SI at 68 signals close to overbought conditions, but the stock has historically sustained momentum during institutional re-ratings. Initiate core positions on any cooling toward the $145-$152 support shelf. Let's quickly review the core financial health of our featured stocks. Affirm is growing revenue at 38% year-over-year, targeting sustainable GAAP profitability in FY27 with improving unit economics. It holds $2.10 billion in cash. Oracle exhibits accelerating revenue growth at 18% year-over-year, driven by its OCI segment, boasting an impressive 44% non-GAAP operating margin and $11.40 billion in cash. Palantir PTRR is a hyper-growth engine with 85% year-over-year revenue growth, a 28% GAAP operating margin, and a pristine balance sheet with $5.80 billion in cash and zero debt. Its FCF yield is around 3%, significant for such high growth. These companies demonstrate robust financial positions capable of sustaining their growth trajectories. We maintain a clear strategic stance. This is a stock picker's market. The focus is on owning structural winners while maintaining liquidity to navigate macro uncertainty. We see continued strength in AI infrastructure, with companies like Micron, Broadcom, and NVIDIA having backlogs sold out through 2026. These are the arms dealers of AI, possessing pricing power and an institutional floor due to index fund holdings. Despite the compelling opportunities, some risks loom. The primary concern is the binary Friday non-farm payrolls report next week. A surprise above 220,000 jobs could trigger a wage push scenario, pushing the 10-year yield towards 4.6% and causing a 10% correction in interest-sensitive growth stocks. Conversely, a print below 180,000 jobs would be highly bullish. The volatility trap is another concern, Low VIX alongside high move index suggests complacency in equities, making them vulnerable to a sudden bond market shock. Specific stock risks include Affirm's Affirm high, sensitivity to macro liquidity, and consumer spending data. A severe recession could spike net charge-offs, or regulatory clampdowns could impact merchant fees, although the chance is not high. ORCL faces stiff competition in the AI cloud sector from Microsoft and AWS, and failure to fully monetize its Cerner healthcare dataset could be a headwind. Palantir, PLTR, while strong, carries valuation momentum risk and potential competition from large tech players like Microsoft's Fabric or shifts in government spending could impact its growth. We recommend maintaining a 15% cash reserve to capitalize on post-NFP volatility. And do you own dual diligence? The market is at a pivotal juncture. While the broader indices might seem calm, under the surface, a stock picker's market is in full swing. We've highlighted Affirm, ORCL, and Palantir as high-conviction opportunities, each poised to capture significant value in the evolving AI and digital economy landscape. Remember, the key is to stay invested in structural winners while safeguarding your portfolio against macro shocks, particularly the upcoming non-farm payrolls report. Maintaining a cash position isn't about betting against the market. It's about being ready to buy the gap when opportunity strikes. Don't forget to like this video, subscribe for more in-depth financial analysis, and let us know your thoughts in the comments below. We'll see you next time.